Welcome to the Cherry Beckert Tax Beat, a conversation about tax that matters.
Welcome to this edition of the Cherry Beckert Tax Beat podcast. Today's conversation is focused on the schedules K-2 and K-3 for partnership and S corporation tax returns. These forms were introduced in conjunction with 2021 returns, and now we're in our second year of including these forms in most returns for tax year 2022. We'll talk a little bit about the history for why the IRS introduced these forms and spend a lot of time focusing on exceptions that many businesses are looking for to escape from this compliance burden, or what many companies view as a compliance burden. Joining today's conversation is Mike Elliot, director in our firm's national tax team. Good afternoon, Mike.
Hey, Brooks. Good morning.
Also joining us, as always, Sarah McGregor from Greenville, director in our office down there. So, Ms. McGregor, how's life treating you?
Life is good. The Super Bowl is over. It was very interesting and well-played game. So I guess now the rest of tax season goes on.
All righty. I'm sure they're all crying in Philadelphia today, however. So let's move on to today's topic, a little background. It was July 2021. The IRS formally introduced schedules K-2 and K-3. And just let's put this in a very broad sense. These are forms about supplemental information on foreign tax activity or foreign activity, the tax implications of foreign activity and financial consequences. That was usually reported in a series of statements attached to the partner or shareholders K-1. This was a more formalized approach to doing that. The prior reporting was, some might argue, chaotic, sporadic, not very efficient. Some may argue that there was very little compliance. There was certainly no consistency. I think everybody would agree with that. And so forms K-2 and K-3 were designed to bring uniformity, consistency, and maybe a little higher level of standards to reporting these items of international tax relevance. In the big picture, most of these forms are impacting, and in these pass-through entities are having an impact on the underlying taxpayer, not the pass-through entity itself. That may not be 100% true all the time, but I think that's the general rule. All right, until the 2021 tax return form instructions were released, many pass-through entities that did not conduct or invest in international activities assumed that K-2 and K-3 forms were irrelevant to them. There was nothing they would have to do. I mean, these things say international and foreign all over them. So why, if you are a simple business doing business in one state in the United States with a fairly simple ownership structure, why in the world would you have to fill out a bunch of forms? And God knows, I forgot how many pages there are and how many instructions. I mean, these are not one page.
It's like nearly 20 pages for each form, the K-2, and another 20 pages for a K-3.
So
for each
40
K-3.
pages in total. 40
Yes.
pages in total for the form, and then at least 3 times that much for instructions, I think. But anyway, but then going back to 2021, the instructions were like a surprise and said, oh no, we need broad compliance. If there's any possibility that any owner might need this information, and that comes about from some of the international tax calculations that we'll talk a little bit more later, then you have to do the K-2 and K-3. And this certainly rocked a lot of the tax community, and a lot of business owners were not happy with that, with that interpretation coming down. So continuing along this, taxpayers and return preparers pushed back hard to get some relief. So let's complete our history. And so, Mike, why don't you tell us a little bit about the relief taxpayers got last year, because I think that rolls forward into this year.
Okay, Brooke, so one of the first things that happened is the IRS released Notice 2021-99. So what they basically said is that they're providing relief for a good faith effort. So that basically means that certain affirmative actions would be required by the partnership and return preparer. You can't just get out of paying. You can't just get out of filing the form if you don't, just because you just don't feel like doing it. You have to show that you at least tried to figure out whether anybody would need the information, and that you've satisfied yourself that at least no one likely needs it, right? And that you at least made the effort to actually comply with the rules. And of course, if you do decide that somebody may need the information, you would put in a good faith effort to report that information as accurately as possible. And as long as the partnership and preparer could show the IRS that they actually made this good faith effort to comply with these new requirements, they wouldn't have to worry about having any kind of penalties.
So, Mike, why is it important that a taxpayer go through this effort and think about filing a K-2 and K-3 correctly for a pass-through entity tax return?
Well, the reason why it's important is there's actually several reasons. So there could be penalties for failure to file timely or correct or complete tax returns, because we can't rely on Notice 2021-39 anymore for 2022 returns. Another thing is that we may have to provide this information later if somebody asks for it later. And also, the statute of limitations may not even start. If we don't file a complete return that's correct and includes all the information that needs to be included, our statute of limitations may not even start running until we actually do file that. So if we get a notice later and say, oops, you should have filed K2 and K3, now you have to provide it and resubmit your return, that theoretically starts the statute of limitations over, and it starts ticking at that point. And if you're past the filing deadline, that may mean you may have to file an administrative adjustment request, which is kind of a bit more involved than if you just had done it right the first time.
Right, and there could be penalties associated with each of the K1s that were supposed to have this K3 with it. And
Absolutely.
There's a penalty for each month that those are outstanding as well. So
yes, those can rack up pretty quickly.
So I just want to add, and I think the bulk of our conversation is coming from a negative perspective on these forms as a compliance burden. I do think it is important to note right now that another reason it is important to file K2 and K3 correctly is that when it does matter, and there are cases where this information is important to make calculations on the underlying taxpayer's return. So, I mean, the purpose of this podcast is not to go through in-depth international tax, foreign tax type calculations, but there are cases truly where this is really important information to get out so the taxpayers can do that. This, however, feels like the sledgehammer type approach. Let's totally bring down all this compliance on every person under the sun, rather than focusing on the ones that they really need to get it right. All right, but anyway, so let's move on. So like I said, you set the background on 2021 returns with the notice. So let's go to 2022. So technically the 2021 notice is no longer effective. So what's the landscape now, Mike?
Okay, so Brooks, for final 2022 partnership and S Corp tax returns, the instructions for schedules K2 and K3 were published in December. So now we know what they're expecting for 2022. There's now 2 exceptions for filing schedules K2 and K3 for pass, and the pass-through entities are only off the hook if they meet at least one of these 2 exceptions. So these exceptions, there's the domestic filing exception, and there's another exception called the Form 1116 exception. And I'll get into what both of those mean in a bit.
Okay, well, so we got 2 broad exceptions. So let's take this moment now, because I think this is really important. Let's dig deeper into the domestic filing exception then.
Okay, so there's actually 4 tests that you have to meet in order to qualify for this domestic filing exception. So all of these requirements must be met in order to qualify. So you miss any one of them, you're out. So the first thing is that you could either have no foreign activity or what they call limited foreign activity. And then second, all the owners must be either U.S. citizens or residents, or domestic trusts or estates that have U.S. grantors or decedents and U.S. beneficiaries. or an S corp with only one shareholder, or disregard a taxable entity that in other words, it's a wholly owned entity that is owned by one of the previously described taxpayers. So it doesn't have to file its own return, but it can't be owned by any type of taxpayer that wouldn't qualify for the exception. Okay, so you can't have any partners or shareholders other than the ones I just described. Now, the third requirement is that notification must be made to the partners that they will not receive a Schedule K-3 from the partnership unless they specifically request it. The fourth requirement is that we can't have any requests from the partners on or before what's known as the 1 month date. And what that actually is the date that's exactly 1 month before the partnership or S corp files its tax return for 2022. We don't really know what that date is until we actually file the return. But the point being is if anybody requests it at least 30 days before the return is filed, you don't meet the domestic filing exception. Now, keep in mind, I'm sorry, Sarah, go ahead.
I was going to say the notice to partners and shareholders requirement was originally a more complicated communication and process, but not so in the final form instructions. They made it easier, didn't they?
Yeah, no, that's true. That's so under the final instructions, the PT can actually attach a statement with the K1 just saying that we're not filing forms K2 and K3. This is a welcome change because the original draft instructions would have required the partnerships to send out notification to the partners no more than what they called the 2 month date, which really would have been 2 months prior to the original due date of the return. So if you were a calendar year partnership or S corp, this notification would have had to have been sent out to the partners by January 15th of 2023. Now we can just simply notify them with a statement attached to their K1. But I do want to get back to what types of owners you can have, because I mentioned what they all are. Right? You have to have U.S. citizens or resident alien owners or really domestic trusts or estates. Now, if you have so much as one upper tier partnership or one C corp or one S corporation that has multiple shareholders in it, or if you have one foreign partner or any disregarded tax entity that's owned by any of these types of taxpayers, you're out. I mean, you don't meet those requirements. If you have any foreign source income from a source that isn't passive category limitation income, or if you have foreign tax that's greater than $300, you're out. This is actually speaking to that where you can only have limited foreign activity. The only type of foreign activity you're allowed to have is if you have passive limitation income and no more than $300 worth of foreign tax. And it has to have been reported to the partnership on a 1099. If you have any other type of foreign source income, then you don't meet the domestic filing exception. Now, if you have even one partner or shareholder who requests a K3 on or before the 1 month date, which I just told you what that was 30 days or 1 month before the return is filed, you're out. Now, when I say you're out, what that means is that you don't have anything official that you can hang your hat on. You can't point to either the domestic filing exception or the Form 1116 exception if you don't meet the actual requirements to a T. Now, let me talk about that other Form 1116 exception, because that's the other way you can meet it. If you don't meet the domestic filing exception, you might be able to get there through the 1116 exception, but that's going to require a bit more effort on the partnership or S corps on their part, because what they're going to have to do is get confirmation from each of the owners that none of those partners or shareholders or ultimate owners are going to be filing Form 1116. Now, Form 1116 is the form that you would actually file to claim a foreign tax credit. Individuals, they can actually just claim a credit if it's a small amount on their return. I think if it's like $300 for a single person or $600 for married filing joint. If that's the only foreign tax that they have to report, they don't have to file that full-blown Form 1116. As long as you know that no partner or shareholder anywhere is going to be filing an 1116, and as long as we can get confirmation on that from the partnership or S corp, then we would meet the Form 1116 exception, and then we wouldn't have to file the K2 or K3. But again, if you don't meet either one of these, if you don't meet the domestic filing exception and you don't meet the 1116 exception, then you really don't have anything that you can hang your hat on. That doesn't mean that you're necessarily going to have the book thrown at you if you don't file. It just means you don't have anything official you can point to. There's some situations where you might find out that for a fact that nobody's going to need this information up the chain. If let's just say we prepare all of those returns and we know nobody needs it, we may be able to get there that way too.
So, Mike, is it so if we have a partnership or an S corporation that doesn't qualify or doesn't want to go through the hassle to confirm that the 1116 exception applies, or just chooses not to go through and try to meet the 4 requirements for the domestic filing exception, for an entity that doesn't have international activities, is it very difficult to complete and file the K2 and K3?
No, I mean, it's not terribly difficult. You think about if you think about it, I mean, we don't really see many situations where it's going to be really difficult to file the form. And if you can't meet the exception and it's really not that big of a deal, honestly, it's really just go ahead and file the form. It's probably easier than just hoping that nobody turns around and points the finger at you and says you should have provided it. I would say is if you can't meet one of these exceptions, I would probably go ahead and file the K2 and K3 just to be safe. Probably easier.
Well, I think there's some. I know that's a great answer from a tax CPA perspective. I just you sit there as a business owner and you say, I got 50 partners, whatever. I know my partners, none of, I don't know, they're not my best friends, but the chances of this meaning anything to anybody seem so remote. But I hear you. Okay, so let's go back to one of the requirements you talked about, the one that seems very problematic to me in its application. It's no request from an owner for the K3 within 1 month of filing. Well, you file the return. I mean, how do you know you qualify at the time you're filing if the test is 1 month, you got a 1 month parameter? So what are your thoughts on that, the timing in that situation, Mike?
Well, look, I think at the end of the day, it's ultimately the taxpayer's burden to let us know that nobody has actually requested it. If we send a return to them, right, and they're about to go file it, they need to look back within the last 30 days. And if anybody asks within the previous 30 days, they're okay. But
that's easy. I mean, that's
right,
easy.
but you can figure out they'll know if somebody asked 30 days before they're about to file it. And if anybody did, they need to let us know, and they shouldn't go file the return at that point. Okay. They ought to let us know immediately, and that's what we're going to ask our clients to do. We're going to ask them to tell us as soon as somebody asks for a K3, let us know. Now we'll send out an information request when we're about to start preparing the return, and we're going to say, hey, let us know if anybody has asked for the K3. And if you reply back that nobody has asked for it, we're going to proceed under the assumption that nobody has asked for it, and that you'll let us know if somebody does. If that changes, you need to let us know, because we're going to go down the assumption that we're not going to be preparing K2 and K3 unless you tell us at that point.
So what happens? Yeah, what happens if someone gets a request after you file the return, or within that 30 days, say 5 days before the return is to be filed, or you're sitting there with it ready to e-file, and one of the partners pipes up and says, hey, send me the K3.
Right.
What do you do then?
So, okay, at that point, you don't have to hold up the return because it's not within 30 days of when you filed it. It wasn't before the 1 month date. So I think you can go ahead and you can file the return. And the thing is, the good thing about it is you're not going to have to provide that K3 or any K2 to the IRS. You are going to, however, have to prepare a K3 for that partner who requested it, but you do have a little more time. You have to provide that to them when the later of the date in which the partnership files the return, or 30 days after they request it. So if they only request it 5 days before you file the return, naturally the date, 30 days after that is going to be after you file the return. But it does give you some time. You can go ahead and file the return. You don't have to worry about attaching a K2 or K3 to it. You only have to provide a K3 to that partner. However, you are, now that you know that person is going to need it, going forward, you're going to have to prepare K2 and K3 for all the partners in 2023 and thereafter.
Okay. I think that's the part the nuance you're talking about is the part I wasn't understanding in my first read. Okay. That makes sense. Okay. So what do we want to talk about now? Are we ready to, so Mike, you see, I think the most problematic thing to me is private equity partnership returns. You got tiered ownership structures, but you may be clearly in a situation where it's a domestic activity, and making the decisions in that space seems to be some of the more difficult ones, because you can really rack up some compliance costs generating all these forms when you have lots and lots of owners. And anyway, so what do you see with the partners? Do you see our partnership clients opting out of trying to do this, or do you see them opting in, saying it's just easier for us to go ahead and let's just go ahead and do it, not mess with any questions, or are they going to try hard not to do it?
I think it really depends on the client, but I think most will probably opt in. I mean, at the end of the day, I think most of them want to do it right, and particularly if it's not a terribly hard thing for us to do. We already got all the information. We already can compile it easily enough and get it onto the forms. It just can be really inefficient for them to have to go back to the drawing board after the fact if somebody comes and requests it. I think they'd probably rather provide it unless they know for a fact that nobody needs it. And I think it may be more effort to try and figure out that nobody's going to need it. It may just be easier just to provide it to them. That's my take on it anyway.
It's certainly easier to pay your CPA to do it. It may not be the most cost effective. It's certainly easier to pay your CPA though. Yeah, sure.
Right. That's right. So even a real estate partnership, with a rental office building in one state, one location, you don't know who's invested in it necessarily, or what their financial activities are of those investors and owners. And so even in that situation, which is clearly domestic, it may still make sense to provide the K-3, just because you don't know how the rest of their owners and what their tax perspective may look like.
And precisely, because if somebody does request it after the fact, you're still going to have to provide it anyway, and which means you're still going to have to do the work. So if you think there's a good chance you're going to have to do the work anyway, you may as well just do it and file it.
Right.
And then you
have to ask for it. Yeah, I think the big issue is for clients who may need it, or who, or for investors and owners of pass-through entities, go ahead and ask for it now. And let the partnership or S corporation know. Yeah.
No, particularly if we prepare an upper tier partnership return that actually gets K1s from a lower tier, if we already know that we're going to need to file a K2 and K3, we ought to go ahead and request that from those lower tier partnerships and let them know right now. Don't wait until we're about ready to prepare it, because we could be getting close to the deadline at that point, and they may not be able to provide it timely to us. If we go and request that after they've already filed their return, they get another 30 days from after we requested. And if we're getting close to our deadline, we may not be able to get that information timely enough to include it in our own filing. So plan ahead, basically. Ask for it if you know that you need it.
Yeah, we did see that last September and October, when
Absolutely.
we got last minute K1s and there was no K3 attached, and we looked and we're very surprised about it. Yeah.
Oh yeah, and we were. I mean, a lot of preparers took the position, I'm just not going to do it. I'm just not going to deal with it, and I'm just not going to bother with it. And after they already filed the returns, they still didn't bother with it, even if we requested it. Even though they should have given it to us, they didn't. So, we had to kind of fend for ourselves and try and figure out what that information would have looked like without having been provided an official form. We don't want to be put in that situation.
Yeah, well, but I just want again go back to maybe the practical dilemma you're in. You probably had some CPAs that their clients didn't want to pay them to do all that work, and so I mean, it's not just like the CPA deciding I don't want to do a K2 K3. It's probably the client saying I don't want to pay you to do a K2 K3. And
absolutely.
Right. Okay. All right. So I think it's time for us to move on to final and closing comments. So, Mr. Elliot, the floor is yours. What are your final words of wisdom here?
Well, look, I just think everybody needs to become familiar with this, this new reporting mechanism that they're not used to yet. And even though this is the second year, I think the IRS is putting a heavier focus on it now that that notice doesn't apply anymore. We can't just rely on good faith effort. We really need to make the effort to do this right and to understand what those requirements are and really just plan accordingly. It's just these requirements were really imposed on us, but in many cases they really actually are needed. I think that ultimately the partners and shareholders are going to need this information in order to be able to prepare their own returns correctly.
All right, Sarah.
Yeah, and I agree with that. I think as much as middle market companies, portfolio-owned companies, pass-through entities are engaging in more international activity, it makes sense that the IRS has standardized the information flow to make compliance easier by those who are investors, not necessarily by the businesses who are putting this information together, but definitely by streamlining the information flow to investors onto their ultimate tax returns. So I can see this. I can also see where the IRS has listened to the taxpayer and preparer communities in the way they've adjusted the filing instructions over time, and they gave us the notice relief last year, and have given us some reasonable opportunities to apply an exception to filing the form for those truly domestically owned and operated entities.
Right. On my part, I'm still a little conflicted about this area. I totally understand for the entities with true international activity why this is a great thing, why it's an important thing. For domestic only, it seems an awful lot to be asking people, and I'm really curious to see some analysis a year or two from now. What is the materiality of this? You take all the information you got on K2 and K3s. I mean, most of the time this is dealing with a nuanced part of a calculation, frequently on a foreign tax credit. How much difference did it really make versus the cost of compliance we have put in our system? So I'm going to bet that we continue to see some more easing of the requirements as we go on this one, and trying to increase the reporting on the ones where it matters and back off on the ones where it doesn't matter as much. We'll see though. All right, that's a wrap on today's discussion on schedules K2 and K3 and particularly the domestic filing exception for pass-through entities. Thank you for listening in. A quick disclaimer that we are not providing tax advice on this podcast. Please consult with your tax advisor, hopefully at Cherry Beckert, with your specific tax issues or to discuss information from today's podcast. Check out the firm's website at cbh.com for the latest guidance and materials on this and other tax and business topics. This concludes today's podcast. Please like, share, and subscribe. Thank you, Mike. Thank you, our listeners, for spending your time with us. We truly appreciate it. Let's call it a day and go forth in peace.